Welcome back, everybody, to the Norton Radio podcast. As promised, Mo Hussein here, founder of Balanced Asset Solutions. Mo, thanks so much for being here, buddy.
Hey, Pete, happy to be here.
All right, I actually asked you guys to come on, ask Balanced Asset Solutions to come on, because there's a lot of challenges when setting up your accounting systems, and a lot of people don't a lot of people don't know that you can't mix funds and all that good stuff. So, but just kind of talk to me about like how to get your accounting in order, like how, like from for newbies to maybe somebody who's been doing this for many years.
Yeah, good question. And are you referring to like in the context of like actually like implementing new software or just more generally speaking?
Yeah, let's start generally speaking, right? So,
Generally speaking, yeah.
generally speaking, what are some of the big mistakes you've seen people make in the
Yeah.
beginning that kind of mess things up? Like I know, like when I started, I guess my balance, what is it, your balance sheet? My balance sheet was messed up, and because that starts from day zero, no matter what you do, it never gets fixed, in my
Yeah.
opinion. Anyway, at Empire anyway. So just tell me like, okay, so like what are some of the most common mistakes that people make when they're just starting out, like in business, especially in the property management business?
Yeah, great question. I think that one of the interesting things is, and I'm sure Pete, you've probably had a very similar kind of trajectory or kind of series of events is that, most folks usually don't start off in property management, like starting a property management business. Most brokers initially start off doing sales and doing brokerage types of services, whether they're representing the buyer side or the sell side, right? And then over time, maybe things slow down, or maybe they had clients that loved working with them and asked them if they would be open to potentially managing their properties from a property management capacity. And that's usually 98% of folks that start in property management. In property management, you as a broker, you have your PMA agreement. So you do have your broker's license kind of on the line for the service that you're offering as a property manager. And it's not as easy kind of just start up and running as it is in the brokerage side of the business because you're doing more transactional, right? During just the sales cycles. And then once that work is done, it's complete, right? Versus property management, there's, a department of real estate that has a bunch of different compliance rules, a bunch of different regular things that need to be addressed and keeping, your funds not mixed between your corporate and whatnot. And then you need to get your software kind of established. And so a lot of the times, most property managers, when they first start off their property management business, accounting becomes kind of an afterthought. It's not something that is at the forefront or something that's even really considered. And a lot of times they may have a leasing agent that they will slowly push into kind of more of an accounting role, if you will, or like a regular bookkeeper that starts doing more and more accounting activity. And so I would say that, starting off like your property manager business, like having the right accounting system is very, very important. One that you can actually manage all your clients' funds separately. And then even just getting it implemented correctly is also kind of a challenge. Nobody got into real estate because they love accounting and compliance, right? And so, you focus on the things that make you or enable you to make the most amount of impact to your business, which is working with your owners, growing the portfolio, working with your tenants, and it's most often a lot more cost effective and sometimes usually the opportunity cost of doing that admin work kind of yourself is better utilized by working with a third party firm that kind of focuses on that. So I would
I
say probably
know
that's probably the biggest things.
I know today, 2025, there's a
Right.
bunch of property management packages which has accounting built in.
Right.
But I still see sometimes people using like QuickBooks,
Right.
using QuickBooks for their property accounting, and they use the same QuickBooks for their company books.
Yeah. Yeah.
So that's I had a company of mine, a friend of mine was doing just that. Even after he bought Appfolio, he was
Right.
running it through QuickBooks. So, for you guys out there, especially very, very newbies, the property management software actually is the accounting software. Is that correct, Mo?
That is correct. There's a lot of programs out there that do kind of both. all in one. Like operationally, if you think about like leasing and managing work orders, inspections, move outs, and then also the accounting side, managing tenant payments, vendor payments, putting together financial reporting, bank reconciliations. Now, I can go outside and throw a rock and probably hit somebody that knows how to use QuickBooks, right? It's a very generic, broad-based, very widely used across small businesses. They have tens of millions of customers that are using it. Very easy to use. But because it's very generic, it's not purpose built for property management. And in property management, you have certain compliance requirements, like separating out funds between your corporate entity or management company versus your the properties that you're managing, and even things like separating out the security deposits and things of that sort that are kind of required. And these property management accounting systems have that in mind and how they were built. And so QuickBooks is a very general accounting system. There's no notion of a tenant in QuickBooks. There's no notion of a building or a rent roll or anything like that. And so the advantage and value of using a property-based accounting system is that, you move out a tenant, the rent roll updates and now shows vacant, right? And then the accounting for that particular property is segmented and separated from the other properties that you're managing. In QuickBooks, to do that, you can use classes and a bunch of different things within the program to kind of separate that out, but it's very difficult, very easy to make a mistake. And I would say most importantly is that the bank reconciliation process is much more different. In QuickBooks, it's just looking at your banking activity and it doesn't know, hey, what property is what. But a program like Appfolio, for example, when you're doing a bank reconciliation, it's looking at the property cash balances to ensure that that can be reconciled to the bank account balance.
What do you say to somebody that says, "Well, I have 40 different owners, so I'm going to
Mhm.
create 40 different bank accounts for each one of my owners because I'm worried about
Mingling.
I'm worried about commingling, and also I'm worried about, FDIC, right? Insurance, right? Like
Right.
$250,000 or whatever, right? So what do you say for those two things?
Great question. Great question. So firstly, you can certainly do that. Now, the challenge with that is that now you have 40 different instances that you have to log in to
40
whenever
different
you.
reconciliations, right? 40 different bank
Yeah,
accounts.
yeah,
Yeah.
exactly. 40 different reconciliations. So the Department of Real Estate doesn't really dictate how many bank accounts that you have. Like what they're more concerned about is, hey, do you have a good process and a process in general to ensure that you're not, stealing from Bob to pay John, if you will, right? And so, there's always a trade-off with like, hey, should I have a separate bank account for every single owner? Or should I just have one bank account that all my owners share? Should I have a separate bank account for security deposits from operating? Or should I have, one for the entire portfolio? And the answer is like all those options are perfectly fine and they're perfectly compliant as long as you're making sure that you're monitoring the accounting and the balances on a per property basis correctly. And that's also the value with a property-based accounting system versus something like QuickBooks, because QuickBooks won't prevent you from there's no controls inherently in the software that prevent you from overdrafting on a particular property that's sharing a bank account with another property that has an actual positive balance. And so, and this is probably one of the most kind of more egregious kind of violations that the Department of Real Estate will look for is that, hey, are you stealing funds from one owner to pay the bills for another owner because they're sharing the same bank account? And so, the second question that you had about the FDIC insurance, that's a really good point. So, when you are establishing a bank account, there are certain banks that offer what are called trust accounts. Okay. Those banks, a couple that we work with pretty closely are like Genesis Bank and Enterprise Bank. And those banks are specifically for property and asset and fund management. And in those particular banking structures, you can have one bank account and each owner that is associated with that bank account will actually have and be insured up to 250,000. And so my answer to kind of that challenge of like, hey, I want to make sure that I'm properly insured by the FDIC is get with or work with a bank that actually has trust accounts, and they'll ask you for the list of the owners that will be tied to that bank account, and you'll be insured up to 250,000 for every single owner.
Yeah, I think if you go to your big Chase or Bank of America, things of that nature, they don't know
Yeah,
what that type of account is. So they just
correct.
write trust. on the
That's
account, but it's
right.
not really a trust account.
Not
So
really a trust account. That's
yeah,
correct.
so the
Correct.
enterprise and Genesis are the ways to go there.
That is-
I want to touch back on what you said earlier because I think I got it right. So if I have one bank account and I have 40 owners and one owner
Mhm.
goes negative and I pull from another owner just in that bank account to pay the maintenance, the maintenance request, maybe it goes over the reserve and he goes negative, and then the rent comes in, 2 weeks later. Is that something that an auditor would hit me for if they see that happen multiple times, or because that not allowing a entity to go negative really affects the way you can run your business.
that is very, yeah, that's a really good point. And that's very true. So, the way that like, we're humans and people can make mistakes, okay? Auditors recognize that also. What they're looking for is negligence more than anything else and kind of persistent kind of violations, if you will. And so, if you have the right software and the right controls in place, you would not have paid that maintenance bill that would have pushed the property or that owner's funds into the negative. Programs like, Folio, Yardi, these programs have actual ways when you're doing a payment
Right.
run to filter
They
out
don't allow the
influence.
portfolio to go negative, right? They won't actually write the
Exactly.
check. Yeah, say,
Exactly.
well, tell that to my vendor who I've used, and now I'm not paying him, and then he doesn't call, and then he doesn't return my calls anymore.
Right. No, and that's the interesting position that a lot of property managers are in, right? You have relationships with your vendors. Your vendors don't really, they
Vendor
could
works
care
for
less.
me, not for the property owner.
Exactly. They could care less about, who's paying them. They just want to make sure that they get paid and they could care less about your owner relationships. But it's very important. One thing that you mentioned is kind of the reserve, right? Like, hey, there needs to be a certain level of reserve on the property. And over time, you should get a better feel of what that reserve should kind of look like. And then the other thing is, a lot of client, like one way to work kind of around that a lot of clients will go about this is, the property management company will front the funds. And obviously, it's a separate bank account. They'll front the funds and then they'll bill back the owner because they don't
So a
have
lot
the
of
funds to pay. And
transfer
they'll
to
put
and from.
exactly, and they'll put a markup on it because they had to cover it. I think that's a very simple conversation to have with the
I
owner, and
think
that,
that's a great
hey,
point you made, though. They put a markup on it, right? So whether it's
that
a
is true.
percentage or it is an administration fee, something
Yeah,
should go in there.
that's completely,
I'm gonna tell you a story, and don't judge me, okay? But
yeah.
I used to allow my portfolio to go negative all the time.
Hmm.
And when I sold to Mind, I had to do a complete audit. And
Right.
I found I had $37,000 owed to me in owner funds. And
Wow.
that went negative. It went negative. Because we had so many owners, we were able to go negative that much, but I had to write a check for that
Mm.
37,000. So
Cover that
I ended up
shortfall.
paying for it. So if you
Mm.
listen to this, if you do put that control in, that is going to make your life a little bit more difficult because you're not going to be able to pay certain people at certain times. Like when a light bill comes in and the money's not there, but
Right.
it will prevent you from going really cash negative big time, right? So you
Right.
can make
Right.
because now you have to do something about it, right? I either have to take that thing off, the blocker, or I have to invest money, my own hard-earned money, and put it in at the time, which hurts at the time. So
Right.
I do highly recommend that don't do what I did, learn from my mistake,
Yeah.
and don't
Yeah.
allow portfolios to go negative, and actually have a process in place
Right.
for owner. Well, we have a process for tenant, for tenant collections. Have a
Right.
process in place for owner collections.
Yeah, yeah. So one thing I wanted to add on that also, Pete, is that you as a property manager have a pretty good understanding of when, like, maybe large renovation builds or remodels or things that are happening on the owner's properties, right? And you probably have a good understanding of average cost for like unit turns and things like that. And those are usually kind of the big bill, big ticket items, right? And so anticipating when those are going to happen and maybe the month prior when there's a big bill coming, you can have the conversation with the owner like, hey, we know there's going to be a big bill that's coming because of whatever renovation that you've already approved. We're not going to give you a distribution this month to ensure that we can pay that bill. Secondarily, as I told you, we have a lot of clients also that just they handle actually all the expenses and they just bill back and put a markup on everything. And this can actually be a substantial kind of revenue stream. Maybe they
Yep.
use the corporate credit card or whatever to pay it, but then they'll put a markup somewhere to the tune of 15 to 25%. And that
Yeah.
can be substantial, right? And then the last thing that I wanted to comment on, Pete, is The other thing that we see, and the reason why you don't want to, just because, hey, you're expecting rent to come in the next month. I mean, anything can happen with the tenants or the cash flow in the property, right? COVID hit, people stopped paying rent, or something happened, with the handful of tenants that are paying the majority of the rent and they're paying late now. Now the property's continuing to be in negative balance. There could be an instance where, there's a disagreement or a scuffle between you and the owner, and you are no longer managing that property. I can't tell you how many times we're auditing a client's books and we find 100 properties with negative balances tied to the trust account. And they're like, oh, well, these are past properties. We don't need to worry about them anymore. It's no, those owners,
That's what
although
happened to
those
me.
are no longer active, they stole from somebody else that had
Yeah.
funds in the bank account.
And you have to make it right. So they end
You
up
have to make it right.
they
You have to
stole
make
they
it right.
stole from me in my case. Yeah.
That's right. And you allowed that to happen. That's why you're the broker on record, right? You allowed that to happen. You paid those bills in order for those
Yeah.
assets to go negative.
I'll
And
tell you in my experience, Mo, I got the most when I got the most time I went negative was mainly when it was an eviction.
Mhm.
And secondarily, when there was a property that came on that was in between a turn and didn't rent for a long time. Those are the two big ones because those electric bills will eat up that. I'm down here in Houston, Texas, so those electric bills in July, August, September, they'll eat up that reserve like nothing, right? You have one electric bill, one landscaping bill, you're gone, and then the owner, he lives in China or he lives in,
Yeah,
some other place, and he's like, "Yeah, I'll
yeah,
get you the
yeah.
money," and you never
The
do.
electric bills can kind of sneak up on you. Fortunately, there are solutions for that too. There are companies like Livable and Service and stuff like that that will actually handle all the utility billing, will pay the utility providers, and then they'll actually even charge the tenant an admin fee. I rent from a property managed by a large multifamily management company, and I see a charge of like $10 that shows up on my ledger each month. That's just the admin fee for utilities. And I know on the back end there is a rev share model that's happening, so the property manager is getting like a dollar, $2 each month, and
Sure.
the whole bill for the most part is either being paid by the tenants, being allocated using ratio utility billing, and so that can actually be a significant, substantial revenue stream as well.
Yeah, for sure. All right, I'm gonna moving on here. Where do you come out on? So, when I ran my business, I had a security deposit bank account, and then I had kind of an owner's bank account. Um,
Mhm.
I know legally, in Texas anyway, they don't have to be separate, but we decided to do that separately. Where do you come out on? Should we have separate account for security deposits versus just owner accounts or merging them into one account?
Yeah, great question. So us as being like CPAs and accountants, we have a knack and we're obsessive about numbers and balanced books, hence the name Balanced Asset Solutions. But the for like there's you can have a separate bank account for security deposit, you can have a separate bank account for operating funds. That just means you have two accounts to reconcile. You can have a separate bank account for operating, a separate bank account for security deposit for every single property or for every single owner. The net of it is that all these options, and even states like California, it's not really required for you to have separate accounts, but you need to have the right process in place. And so, for organizations where you feel like you don't have the right the right controls in place, the right software that has been configured correctly, and the right accounting leaders or the financial leaders internally that are overlooking the books to ensure that things will not go negative, it's better to just have separate bank accounts because then that way you can ensure that those things are separated and you don't have to worry so much about like, ensuring that one property is not going negative and things of that sort because you're commingling funds. However, if you do have the right staff, software is kind of in place, the controls, and you have process, I always say there's three things in every business. There's people, process, product. Your product is the real estate. Your process is very important. The process is what's going to make or break you in a lot of times. And I'll tell you a story. We had a client that they only had two bank accounts, one for all their security deposits, and they had a pretty substantial portfolio, somewhere to the tune of about 3,800 units. And they're up in the Pacific Northwest, so these are units that are paying rent somewhere between 3,000 to $4,500 a month in rent, which average security deposits being somewhere to the tune of 4,000. So they have security deposit liabilities of close to $700,000. Um, their owner, sorry, one of their CFO, who had been with them for literally 20 years, he had created a fake property in the system, in their accounting system, and tied it to the security deposit account that where all the tenant security deposits are staying. And he wrote checks out to himself. And then on the bank rec was creating bank adjustments to plug those holes. And
Wow.
then would void the checks in the accounting system, even though on the bank statement they actually cleared. And because he created those adjustments, the bank reconciliation was still quote unquote showing as reconciled and balanced. And
Wow.
then comes an
Wow.
auditor, then comes an auditor, and of course, the CFO sees the writing on the wall, quits, skips town, and that is it. That's the last time that owner hears from them. And the owner reaches out to us to do a forensic audit, and we found that he had been embezzling close to $1.2 million over the past 3 or 4 years. And that's the thing. The unfortunate thing about this industry is that embezzlement is actually very rampant, and the
So
root of that.
let's talk about that. Go ahead,
Yeah.
finish your thought, and then I want to find out how we prevent that.
Yeah, that's actually yeah, okay. So the root of that is really the lack of control and oversight. As an owner, most owners of real estate companies, property management, and the like are not financial gurus or accountants or like experts, right? And so just because you've had somebody in your staff that's been with you for eons long, doesn't necessarily mean you want to trust but validate, right? And so you need to have some control in place, and there should be a third party. The person that's reconciling your bank accounts should not be the same person that's also be able to cut checks and things of that sort. You need to have certain controls where honestly, nobody in the organization should have the ability to be able to create like a property record, for example, because you can do a lot of damage in linking it to trust accounts, even though it's not a real property. And you, as the broker on record, are signing the PMA agreements. So you should have some control there to ensure that there isn't fictitious properties being created that can potentially be stealing funds out of the trust account. And so process. You want to have process. You want to have some type of a regular audit or control. And Pete, that example that you gave is not new. We have a lot of clients that will reach out to us. Hey, I want to sell the business. Can you guys help with a forensic audit? We do a forensic audit. Hey, you owe the trust account like $48,000. It's like, oh, well, I don't manage those properties anymore. It's like, okay, well, this is how the conversation is going to go with the buyer. They're going to do their due diligence. They're going to look at exactly how your books look, and I can guarantee you they'll probably hire professional accountant and CPA like our firm or some other firm that's going to ensure that the financials and the amount of funds that are in the accounts are actually correct and that they are covered. And if they find a shortfall, they will most definitely use that to negotiate against the price that they're willing to pay for your business. So
So some of our clients, they want to hire a remote team member to do the bookkeeping. And so
yes,
they ask, how do we protect from that? And so let's dive a little bit more into what you were going with, right? So you don't want to have somebody who can create a property that also will be able to, basically make payments, something like
that's
that.
right.
Is all of that ability in the AppFolios and the rent finds of the world? Can I set up certain permissions and certain things?
That's right. Yeah. That's a good question. So understanding how to utilize staff, and I know that the concept of using virtual assistants, especially since COVID, has been becoming more and more prominent, especially in this industry. And we commend it. It's not necessarily a bad thing. Okay. However, you need to have the right controls kind of in place, and so you can have somebody like a VA that's inputting the initial invoice data entry. Like, hey, somebody needs to input the invoice number, which is on the invoice, the vendor name, the property, the due date. However, uh, products like Appfolio and Rentbind and stuff have an approval workflow, and you should have that in place. This ensures that they do, you have them do kind of the initial coding work, and then you have somebody more senior that's in the organization or using an accounting firm like ours to actually do that final validation before the payment goes out. At the end of the month, when the owner distributions are being calculated, when management fees are calculated, you want to make sure that there is control and oversight of that process so that, and Pete, I'm sure you probably noticed this also when you were selling your business, is that, you got property managers are moving so fast that you're working with so many different vendors, everything from renovations, new owners, investors, what have you, that sometimes it's very difficult for you to say with high level of confidence that I am getting and billing all my management fees. You'd be surprised how many folks like will overlook that, and it's like, hey, if you're not paying yourself, like what do you, what is this service?
What is
People
this?
don't
What are
get
you
the
doing this for?
opportunity.
Yeah.
It's not altruistic, right? And so things that have to deal with reporting, financials, bank reconciliations, those are things that you probably want to use a more tenured and like an accounting staff, or even at a minimum have like an auditor that on a monthly basis is overlooking that, because it only takes one situation or one scenario where things go haywire that puts you in hot waters, right?
Yeah, it's funny you say that because we used to run a report monthly to determine did we charge all the management fees for the previous month, and
And I
I'm
guarantee you
sure.
always find things.
Yeah, 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 or we also look at did we charge all the leasing fees? Did we charge the lease renewal fees? So we would run these, but it took me a while to get there. And luckily I had a pretty good accounting person at work for me at Empire. Actually, I had three accounting people. Two were remote team members, and one was local. And if you had probably hired you, if I probably you guys were around and hired you guys, I probably would have only needed one person,
That's
not
right.
three, so that you guys can. Is that something that you guys offer? Like you got to do like a monthly review, and you guys will go in and say, "Hey, these are the reports that we need
Yep.
to create for you and look at for you to make sure that there's no embezzlement, to make sure
Yep.
that we are charging the fees that we want to that we're supposed to be charging, all that good stuff."
Yep. 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 Yeah, no, you hit the
And you
nail on
look
the
at the
head.
permissions as well to make sure,
That's
hey,
right. That's
Lucy
another.
Lucy can create vendors and she's
Right.
also paying.
She
Like,
can all
she
right.
should not be able to create a vendor if she's making the payables. She's doing the payables.
That's right. That's right. Or they have the ability to create bank adjustments. It's like, why do they have the ability to make bank adjustments? Like saying they can literally rig and manipulate your bank reconciliation. And it's not, and I'm not trying to say that most people are malicious, I'm trying to give people the benefit of the doubt, but you
But you
still
hear
need
too
the
many stories.
controls in place. You still need those controls kind of in place, because it takes one bad scenario for things to kind of dovetail in the wrong direction. And so one thing,
Agreed.
yeah, we have a lot of clients that use VAs and stuff, and they'll use our team for kind of like ensuring financial compliance, oversight, and ensuring that, one, like they have the right permissions in place as well, and that they're looking at certain, like the right reporting, and we help ensure that they are calculating and getting all their management fees.
Yeah.
And there's workflows and
Look,
stuff that you
the
can build in.
property management it's an accounting intensive industry.
It
It really
is.
is not just for
Yep.
our own books, but for also our clients, right? I mean, you have all this property accounting. If you have, 100 properties, that's 100 pieces of accounting plus all the
Right.
fees that you're supposed to put out there. Plus, there's all these people touching the system. So, yeah, I mean, it would just make sense to have an expert to just be there every monthly, just to kind of do a review to make sure
Right.
that everything is running, on point. So let's roll into what are some of the financial KPIs as an owner of a property management firm I should be looking at on a monthly basis?
Yeah, good question. So I'm going to separate that out into two buckets. One is the financial KPIs that are relevant to your owners that you're managing for. And then secondarily, our financial KPIs for you as a business operating as well. So for the owner funds, that's trust accounting, right? So the things you should be reports and KPIs looking at is the trust account balances, which is the property balances, ensuring they're never negative, that your security deposits are reconciled, and that the liability associated with your security deposits matches with what you have on your rent rolls, that your bank reconciliations are being done on a monthly basis, and that there's no adjustments. You stay away from things like journal entries, because a lot of these systems have what's called sub-ledger systems. So like a tenant ledger rolls up into the property ledger. So if you're dealing with a
Didn't
security
QuickBooks used
deposit,
to have they used to have a button that just said, make a
yeah,
transaction, just like click on it and
yeah,
it
yeah.
reconciles itself, right?
Right, right,
Some
right.
kind of journal entry. Yeah.
QuickBooks is also dangerous because you can do one-sided transactions. Like, hey, I just want to do a
Oh, yeah.
debit, not a debit and a credit. That's the other control that you have with these accounting systems. So yeah, trust accounts, security deposits, bank reconciliations, ensuring that those are current and that there's no adjustments. And I would say specifically on the bank reconciliations, you want to look out for things like stale items, especially in the deposits section. Okay, if you have a deposit that is outstanding, in other words, it hasn't cleared the bank yet, and it's $10,000 and it's been months, where is that cash, right? When you enter a tenant receipt, or you enter a deposit on a property, it increases the property balance, let's say in this example, by $10,000. It won't clear the bank until you put that $10,000 into the bank account. Okay. So if you have outstanding items, deposits, if you bring it to the bank, it takes maybe 1, 2 days to clear. Okay. So 1 to 2 days behind on the deposits being cleared is fine. But if you have a deposit on there that's showing over 30 days old, that is a concern because you inflated your owner's property balances, you calculated distributions based on that inflated balance, and you have the potential now of your checks bouncing when you're doing distributions. We had a client that had over $400,000 in outstanding deposits that never cleared the bank. And in 1 month, she was doing her owner distributions, and her owners were calling back saying, "Hey, my check bounce, my check bounce." She's like, "Oh, well, I'm looking at your property balance, and it has the balance." But what happened is that that those funds were never put into the bank account, and that was actually a result of embezzlement from one of her staff members.
Wow.
Um, and she did not know. And now, yeah. So the
Oh,
other set of KPIs for you as a property management company. So I mean, you want to look at things like profitability, your revenue, so management fees, leasing fees, maintenance fees. You should be putting markups on maintenance. That's something that is very normal in the industry. We see on average about 15 to 20%. Renovations closer to 25%. And then also like the admin fees, like things like application fees, NSF fees, late fees, if you're in insurance fees as well, and all these things are important to you. And then I would say also is just the profitability. A lot of companies will have like a unit that they're turning over, for example, and that you as a management company may be taking on some costs yourself. So what are those costs? Like there can be soft costs like marketing related costs. Like, okay, how are you funneling those costs and ensuring that you guys are making a profit off of it? If you have a leasing fee, whatever that you expended in actual marketing fees, including the time that your staff is spending on turning that unit over or filling that unit, should not be more than the actual leasing fee. If it is, then that's something that needs to be looked into. It should be a profit center, right? And so,
think I'm trying to remember the financial KPIs that we reviewed. I think one was revenue per property and expense per property and profit per property. I think we looked at
oh,
that on a monthly basis.
right, yeah,
Yeah, and then of course we looked at where the revenue was coming from in the reporting, but that wasn't a KPI. But the rev per property and expense per property.
another. Yeah, that's. Were you guys managing your own properties, or it was properties for on behalf of owners?
No, that was probably third party management, right?
Third
So
party manager. Yeah, yeah. I
yeah,
mean, that's good. I mean, most companies honestly don't usually look at the P&Ls for their owners. It's just like, hey, this is the rent that kind of came in. These are the expenses, my management fee, and that's kind of it. And here's your report type of thing. But that's good that you guys took a look at that because
no, we
the
looked at it for the management firm, not for
oh, for
the
the management firm. Oh,
yeah,
okay,
yeah,
got
for the
it.
management firm.
One
Yeah.
other KPI that I was going to mention that a lot of firms like overlook is lease expirations and lease or rent increases. You're making a piece, you're making a percentage of a commission on the rent income. So if you miss doing a rent increase, and we have clients that approach us like, oh, we've missed, 8 months. We're doing a rent increase now. We missed it. It's been 8 months, and some of these have properties in big markets where like the increase is like maybe $200, $300. They're charging a management fee of almost
Yeah.
10%.
Or,
That's
or they have, or they
90.
have an owner client that says, "Don't increase my rent," because he's scared that somebody's going to move out, right? So
Right,
we
right,
solved that as we built we saw what the market was over the last so many years. It was between 2 and 3%. So we built a 2.5% increase in all of our leases. Also, when you get busy, lease renewal is one of the first things that goes away because you're working on maintenance and turns and
right,
marketing and all this other stuff. And so that happened with us. We ended up hiring a virtual assistant that just did lease renewals, and we went from like 30% of residents on
right,
lease to 96% of residents
right.
on lease.
That's
And we
right.
get
That's
paid
right.
for a lease renewal. We got
You
paid on
do.
both sides. We had the resident pay us, and we also had the owner pay us. And
Right.
we also make more money because we were percentage based.
That's right. That's right. That's right.
All
Right.
right.
Yeah.
So accrual versus cash. What should a property management company be running?
That is a good question. So it comes down to taxes, right? So I mean, so there's two ways you can run a business. Your tax basis can be different than your property management business, okay? From a property management perspective, it should be done on cash basis. The reason you want to do it on cash basis is because you want to have a very strict oversight on cash flow, okay? When I say cash flow, obviously, if you're looking to get this much income that you're billing for, but you haven't received everything and you're making decisions on expense management, you want to make sure you're looking at the actual cash amount. So run the business on cash. Tax basis, accrual. The benefit of accrual is that you have things like write-offs and you have different ways to be able to use things like depreciation and capitalization of expenses. So, if there's an owner that you've been billing, they haven't paid you, on a tax basis, you can write that off as bad debt, right? But on a cash basis, you wouldn't be able to write that off because it's not cash that you received. And same thing when it comes to capitalized
So does that
expenses.
mean does that mean multiple P&Ls that you are recommending?
Multiple P&L. No, no, no. So I mean, so there's some systems, a lot of these accounting systems, they do both. They do both. Like Appfolio does both, accrual and cash. But when you're looking at your business from like an operational perspective and your books and understanding like how profitable or how your business is performing, look at it on a cash basis. When you're preparing to do taxes and putting together and compiling your financials, look at it on an accrual basis. That's the other big benefit with these software companies, these different software products, is that they do dual in tandem, and so it's just a filter that you just click on in order to be able to toggle back and forth.
Are you familiar with like positive pay from the banks where
I am, I am,
can
I
you
am.
talk a little bit about that and tell us what the positives and negatives of it are?
Yeah, yeah. So the whole notion of positive pay, basically, each time you write checks and whatever, you send that report out to the bank to let them know, like, hey, I wrote check 123 for X dollar amount to this vendor, so don't block it, right? It's a control mechanism. It's there for treasury management, like control and services to ensure that money is not leaving out the door that you're not aware of, and that, potentially embezzlement or other things can be there. Now, the challenge is that the control you can have the control much earlier than that. A lot of these software products, you can have an approval workflow for during the invoice processing, even before a payment is made. And you can have only certain people that can approve a payment. And so the challenge that we've seen with positive pay, and to be honest, we've come across scenarios where, clients had issues with embezzlement and funds being stolen, even with positive pay, because the person that embezzled from them is the same person that is sending the positive pay report.
Oh man. Okay.
So
Well, that goes back to the what we talked about earlier, right? Making sure that
exactly,
yeah.
exactly. So
Wow. Okay.
it's a
Yeah,
process thing.
my challenge with it, I never was able to, I never implemented it because look, it's a risk reward thing, right? The more
Yeah,
controls, the less risk, but you have to do a lot more work
that's
on
right.
it,
Overhead that comes with that.
right? And if you don't do it right, then all of a sudden a check, like, let's say you send somebody their security deposit back, and that check wasn't on positive pay, you missed it. You know how many you're gonna get like a
Yeah.
phone
Like,
calls
oh, the
from
check
one
didn't come or
person.
it bounced. It wasn't able to
Yeah,
fix. Yeah.
or I couldn't cash the check. Negative reviews, maybe even like,
Yeah, yeah. And
uh,
even your vendors, right? Even your vendors. A vendor comes to your office and it's like, hey, can you just pay me right now? It's like, all right, you give him a
yep.
check and it's, oh, you get held up with some other things, you forget. He comes the next day and he's like, hey, the
Yeah,
check did not work. It's like, oh crap, I forgot to send the positive pay report to the bank. And you went to the
agreed.
bank the same day
So
that I gave you the check.
for me, it created too much work on the front end. I'd rather just write a check every once in a while if we had to,
Yeah.
if we made a mistake. So,
Right,
uh,
right, right. And have that
well,
control on the front end, right? Like make sure that you have actual hawk eyes on the approval process for invoices even before they go out.
all right, Mo, we're up against it. I'm going to take a quick commercial break and then we'll come have you come back and do the lightning round. We'll be right back, everybody. All right, welcome back. Mo Hussein, CEO, Balanced Asset Solutions. We're going to put you on the lightning round. Are you ready?
Let's do it.
All right. What is one piece of advice you'd give someone just starting out into property management business?
Do not be afraid to seek help. You're not an expert, and don't assume just because you've seen other people or have worked in offices where that activity was occurring that you know everything you need to do. Seek help.
I'm going to add higher balanced asset solutions day one just to set up your accounting correctly because it really caused me a lot of headache when I had my accounting all messed up. Okay.
That's right.
Um, does pineapple belong on pizza?
Oh man. I'm pretty passionate about this. No, for me, I can't do sweet on. No, no, I can't. I love pineapple separately. I love pineapple juice, but not on pizza. I'm very much more of a savory and like love my meat and cheese, not meddling with fruits.
You know what, man? We can go have pizza any day you want, brother. I'm with you on that. I'm with you on that. What was your first job?
Oh man. I immigrated here from Somalia about 23 years ago as a political refugee. My first job was actually door to door selling Kirby vacuum cleaners.
You're showing your age, man. Oh man, that's why
I learned a lot.
so
You learn a lot.
you're the diamond in the rough where or a jewel of the Nile, like where you're an accounting person, but you also have sales experience. Like
I agree.
usually the accounting people don't like sales.
Right.
Not a
That's
big,
true.
you're the one accounting guy can get on the podcast.
Communication. It's communication. That's what it comes down to is
Right.
communication. Not a lot of people can communicate well.
What is your ideal vacation?
Uh, Not answering any phone calls, emails, or text messages.
A staycation, just not answering anything, huh?
I can be anywhere. Yeah, I can
Okay.
be
All right.
anywhere. But my idea,
If you could have dinner with anyone alive, who would it be?
oh, anyone alive? Anyone alive?
Yeah, this always stumps everybody because if I said anyone, everybody says, "Oh, Jesus," right? Like, so I have to make it a little
Right.
difficult here.
Um, God, no, alive.
Oh, everybody, we stumped Mo. All right,
Yeah.
I'll let you come back to that. Let's get this
Yeah, why don't I come
real
back to
difficult.
that?
I'm going to give you a real tough one now. Which Disney character do you most associate with? And yes, you can use Marvel if you like.
Probably a Roadrunner.
Roadrunner.
Which I
All
think that's a
right.
WB character. I don't know if that's Disney, but
It's not, but I'll go with it. It's a
yeah,
character. I'm good with
I'm
it.
always moving, moving, moving. And
Always
so,
running.
yeah.
All right. What's one challenge you're currently facing in your business?
One challenge, capacity and scaling. It's one challenge that we don't have is actually like inbound business and the need for our services, but trying to scale profitably and in a manner because we're bootstrapped. We don't have no debt, we have no investors, and so doing that in a services-based business is very, very difficult, especially trying to scale.
All right. Somebody who's listening to this podcast, they have a question that I did not get to ask you. How would they reach out to you? How do they get in touch with you guys over
Right.
at Balanced Asset?
Yeah, great question. So you can reach me at www or our company at www.balancedasset.solutions.com. You can also reach out to me directly if you'd like via email, mo@balancedasset.solutions.com.
All right. And if you are listening to this and you're not a member of NARPM, feel free to join. It's super cheap and you get crazy benefits. You can go to narpm.org or call 800-782-3452. And if you are looking at using remote team members for your bookkeeping, give us a try at vpmsolutions.com. We have over 40,000 remote team members on the platform looking for work. Many of them have CPAs. They're just not in the US. Mo, thanks so much for being here today. See you, everybody.
Thank you so much, Pete.